As you can see, in the meanwhile, the Treasury General Account, that is, the Fed, has been replenishing its general account by issuing bonds, which is removing money from the economy. They have taken out roughly $500 billion since July 16th. Risk assets have been somewhat impacted by that. Cryptocurrency is also the riskiest asset with the most vulnerable liquidity. Crypto understood that. This is where the liquidity withdrawal ends. Now that the Treasury General Account has been topped off, we don't need to take out any additional liquidity. Raoul will share with us today the very basic dynamics of the current situation with the Treasury Secretary and what it implies for XRP and all other digital assets as well as equities. He will do this by drawing on decades of his knowledge and experience. It is imperative that you all pay close attention because I promise that the next 3 months will change your lives. And today is the first day. It begins today. This is your final real opportunity. So pay attention and press the like button. Now that everyone has seen the video, let's get started. Worldwide liquidity. Since liquidity is increasing at an annual rate of 8%, we are essentially at all-time highs. Since we are investors in technology or cryptocurrency, it is the liquidity that comes to mind. We believe this to be excellent for your revenue, as well as for everyone else. Your cash savings are being completely ruined by this currency devaluation. Everything. This is the foundation of it all. If you don't beat this 8% global liquidity growth rate plus 3% inflation, that's 11%. Your future self is becoming less wealthy. The game we are playing is this one. For this reason, we're taking incredibly risky, ludicrous, and careless chances in technology and cryptocurrency. Well, what chances in technology and cryptocurrency? Well, why is it important? That's what Bitcoin is. Nasdaq is what it is. Markets are being driven by it. Furthermore, there are two distinct scales in use here. Why? Because Metcalfe's law, a network adoption model, explains why Bitcoin is exponential. It's la-la land in terms of performance because, over time, you get both the network's outperformance and debasement. Ethereum, Bitcoin, and other major tokens. Because it's the simplest, I use Bitcoin, possesses the longest record, show people inside, but you do what you want. Solana or Sui, all centered on the same idea. Why is it important? The correlation is 90%. Thus, liquidity is the only macro factor that accounts for 90% of the price movement of Bitcoin, 95% the price movement of Bitcoin, 95% and 96% of the Nasdaq, by the way. I will give them a more thorough explanation tomorrow. This is what we have, and I keep trying to convey it to people. One macro variable is available to us. It accounts for 90% of the price movement of all significant assets. Since everything else is just noise, it's the simplest macro risk-taking opportunity ever. It's all macro risk-taking opportunity ever. It's all just wiggles. The wiggles are visible. They're wiggles. Wiggles, it's just noise. Since this is the tendency, it's just noise. All you have to do to grasp directionality is to grasp liquidity, and your directionality is to grasp liquidity. And you're doing this incorrectly if you're thinking about the next 3 weeks, the next day, or the next month. What is global liquidity doing? Well, the value of the world currency is not at an all-time high every year. Thus, we are not in the phase of acceleration. Global liquidity has been rising. It has only been decreasing lately. I'll venture that the markets have somewhat strangely slowed down. These mark the beginning of Phase 2 of the Banana Zone's Phase 1 correction. We believe that this acceleration phase is when it begins to do more of this. We clearly don't have a pandemic, so it won't do this. As a result, we anticipate that liquidity will increase by roughly 10% to 15% annually. It will start to drive assets if you stay there for a while. Alright, here is the 12-week lead. Since July 16, 2025, for the worldwide M2 chart, we witnessed this strange performance, and it seemed to be broken. It isn't working. You see, you are idiots for paying attention to this. Individuals begin to forget about it. We remember. The Treasury General Account shows what has transpired in the meantime. The feed is that. I apologize. The Treasury has been withdrawing funds from the system by issuing bonds to replenish its general account. They have taken out roughly $500 billion since July 16th. Risk assets have been somewhat impacted by that. Cryptocurrency is also the riskiest asset with the most vulnerable liquidity. That's why cryptocurrency has been so erratic. Rose. Alts have been doing well. After that, they descended once more, and it has only been a little while. Just sloppy, nothing more. There hasn't been anything particularly negative happening. Each time Sol tried to break out, the top of the range was a little sloppy and fell back down. Okay, alright, but since liquidity has been absorbed so quickly, it's usually because they're careless. This is where the liquidity withdrawal ends. Now that the Treasury General account has been topped off, we don't need to take out any additional liquidity. Alright, any additional liquidity. Alright, that bad thing is probably gone now. Tomorrow, this week, next week, or whenever. Additionally, we begin to observe that liquidity will catch up. Is it able to match this chart? I'm not sure, but it has always done so in the past. And in a moment, I will turn to the past. Alright, next we visit the Nasdaq. Following this pattern, it has really performed incredibly well in recent years because this accounts for 97% of Nasdaq's performance. But have a look at this earlier. Nasdaq is capable of doing this as well. All of this is predicated on flows. As a result of the ongoing technology bid, Nasdaq is receiving steady flows and is attracting funds from international investors, among other sources. Additionally, funds from international investors, among other sources. Additionally, because Bitcoin has had less available capital, it has just been careless. The marginal capital then, when the marginal capital returns, Bitcoin performs better. I'll demonstrate that for you. In actuality, this is the Bitcoin versus Nasdaq chart from 2022. So, Bitcoin has been doing better than the Nasdaq. This job is that. It does just that. We own it for this reason. Additionally, it performs these lovely corrective pattern ups. And what we did was get back to our ideal spot, which is around 2 standard deviations, where Bitcoin typically performs better. Many of you, I've noticed, are betting on cryptocurrency tech stocks and saying, well, cryptocurrency tech stocks and saying, well, crypto is boring. It has been altered. The markets shift. Every one of them is unique. They are more than just sporadic incidents. It just so happens, and the more of you, the better. I even heard from reputable cryptocurrency hedge funds. Yeah, we're thinking we're just going to trade more stocks now, they say, because the cryptocurrency market isn't the same, you know. This is what they're going through, and it's very clear what will happen. I also make use of a D-mark. Bloomberg has this. I use this even though I was reprimanded for using a phony version of Tom D-mark. Additionally, I have only version of Tom D-mark. Additionally, I have paid for DMARC for 25 or 20-something years. The 913-9 pattern is what we have. Thus, it begins to imply that Bitcoin will perform better than technology. Perhaps technology makes some corrections. Bitcoin performs fairly well. After then, Bitcoin begins to outperform. Additionally, I would advise that alt to perform better. You'll find another intriguing chart that shows when people begin to become obsessed with a specific market type but has nothing to do with the liquidity flow. The S&P today and the S&P in the 1990s through 2001 are quite comparable. And that's the story of technology, the story of artificial intelligence, and how it spread there. Just intriguing graphic, regardless of its durability. In fact, I don't think so. This most likely rises and then falls. In my opinion, this entire cycle seems to go on a little longer. That's where we first heard it. This market will be there for a little while longer than most people anticipated. Ralph Powell claims that since the M2 doesn't lie, I incline to agree. The cycle will be prolonged if the Fed lowers interest rates or prints money because there will be greater market liquidity until something emerges that begins to drain that liquidity. However, asset prices will continue to rise. That's how easy it is. There, you observe the 95% correlation. There, you also notice the 90% correlation. I hope that this is what is happening right now because it is so obvious to everyone watching. So get enthusiastic, hit the like button, and tell your friends and family about this. Additionally, in order to receive all of the greatest entry and exits on our path to the top, make sure you sign up for Crusader Signal using my link below. I appreciate you all watching. I'll see you later. Calm.